Hey guys, happy Sunday. I've been getting a lot of requests to help explain some basic TA. So today we're going to go over four main things. We're going to go over candlesticks, RSI, volume, and EMAs. So first things first, let's talk about candlesticks. So let's first look at this. This is a candlestick. Alright, there's five main parts to a candlestick. The high price. So let's just take for example that this is a monthly candlestick for January, just hypothetically. So for the month of January, the lowest price for the month was $86. The opening price for January was $90. So January 1st, it was at $90. And the closing price was $100. So that means on January 31st, for the month of January, the candle was, or the price was $100. And the highest price for the month of January was $112. So that means at any point, at any day in January, the highest price hit 112 bucks. Same thing for the low price. At any point in January, the price hit $86. Alright. So now let's talk about more about candlesticks. So traders use candlesticks to make trading decisions based on regularly occurring patterns that help forecast or determine the short-term direction of the price. So you can think of candlesticks as telling a story. Okay. Let's analyze. If it's green, that means the closing price was above the opening price. If it's red, that means the closing price was below the opening price. So this was a green candle, that means it's bullish, it was good. And this is, let's go over the red candle. So this is red, a bad or a downtrend candle. So this bearish candle, we can see this is for the month of January 2018. Let's talk about the opening price. So right here, this is the opening price, 13.8k. So January 1st, it closed at 13.8k. The low price was, the closing price was 10.1k. That means at the end of January, it closed at 10.1. So it dropped 3k during that time. That's the candle body. And the lowest price during that month was 9k. So at any point in January, the lowest price was 9k. And then the high price was 17.1. So at any point, the highest price was 17k. Alright, and that's candlesticks. And let's analyze it a little bit deeper. These are called upper wicks or upper shadows. This thing. These are called the lower wicks, the lower shadows. Alright, so here, upper shadow, upper wick. Whenever you see an upper shadow, upper wick, that's telling you there's more supply than demand. Or you can say there's more sellers than demand. So let's try to read this candlestick right now. So what is this telling me? So these two candlesticks are telling me there's more sellers for Bitcoin than buyers at these levels. So this one's saying at 19k, this means I don't want to buy Bitcoin at 19k. That's too much. Or Bitcoin's at 19k, I guess I'll sell some of my position. So people take profit up here and all the way down. So like say, oh, it's not enough buyers, there's more sellers. What happens when there's more supply than demand, more sellers than demand or buyers? It drives price down. Alright, you got me? When there's more supply than demand, it drives price down. So you can call this area up here supply. Alright, those are upper shadows. Those are more, they lean more bearish. Alright, and then let's look at so for the month of December and January, there's not enough buyers up here, so it drove price down. Alright, let's look at the opposite. Let's look at the COVID drop. So these lower wick, the lower shadow, that means there were enough buyers to push the price from 3.8k all the way back to 6.5k. That's a lot. So that's saying there's more buyers and sellers down here. Alright, and they're willing to buy it from here all the way up here. So that means there's more demand. So that's the basic gist of how to read candlestick patterns. I go more in depth in the Discord, and then also I forgot to mention. So we're looking at the monthly time frame, right? So each one of these candles is 1 month. If you go to the weekly candle, each one of these candles is 1 week. So this one, these 4 make up January, right? And then you go to even smaller time frame, the daily candle. Each candle makes up 1 day, and you get the gist. All right, and then you can see here, like from that one COVID drop, more buyers and sellers down here. There was something else I wanted to mention and forgot. I think that's good enough for now. So that's candlesticks. There's a lot to cover in candlesticks. I just went over the main gist. Basically, they just tell a story and what's happening, saying there's more buyers than sellers, or there's reversal candles, stuff like that. Alright, let's go over RSI. RSI is the relative strength index. It's known as an oscillator. An oscillator is anytime there's something below this chart, which is this thing. It looks like kind of like a lifeline or like a graph, right? So RSI is a momentum indicator that measures the magnitude of price. Anytime it's above 70, it's overbought. Anytime it's below 30, at 30 or below, that means it's oversold. What that means is anytime anyone says it's overbought, oh, it might be a good time to take some profits, okay? Anytime it's below 30, it's like, oh, there might be a bounce soon, right? There might be a bounce or might mark the bottom of the trend. So let's read this RSI. Let's go to the daily. Oops. I mean, I guess we can just read it from here on the current price action. So as you can see, as Bitcoin was trending up, RSI was trending down. That means Bitcoin was losing strength. Okay. So, and you can call this bearish divergence because the RSI was diverging from the price action. What do I mean by that? As Bitcoin is making higher highs, RSI, the strength was making lower highs. The strength was going down. That's why it's called a divergence. This is a regular bearish divergence. So what happens when a divergence happens? The price drops for bearish divergence in this case. So you see higher high, lower high, drop. And then if it extends even longer, then the drop is more significant. So from here, higher high, to here, lower high, bigger drop. And this one was coming for like 3 weeks, my goodness. Higher high 3 times, and it dropped. Lower high 3 times, dropped. Alright. And then let's just explain it. So the RSI provides traders and signals bullish or bearish price momentum. Okay, it's an oscillator, so that's why it's plotted beneath the chart. An asset is usually considered overbought when it's above 70% or oversold when it's below 30%. Alright, that's the relative strength index, RSI. Alright, next, what did I say? EMAs. So EMAs, how I primarily use it. Where's the thing? Let's go to, let's just talk about it. Alright. What does an EMA stand for? It's a exponential moving average. So, Jesus Christ. My bad, y'all. So the EMA is a moving average that places a greater weight and significance on the most recent data points. So think of so right now I'm using the 8, 21, and 34 EMA. So for the 8 EMAs, taking the price, the data history, or the data points for the past 8 days, and it comes up with this line, this green line. And then the same thing for the 21 and 34. Alright. And how I basically use it is that price usually rides the EMA as support. So it's whenever it's uptrending, it's good. When it breaks below one, that's kind of bad. It's probably forecasting a drop is coming, which it did. And then if it's still riding the lower one, which is the 34 EMA. So anytime it touches this, I'll be a buyer because I ride it as support. And right now, this one's not looking good. If it crosses over, that means there's more downside. But for now, since we're in a major bull market, I think it's fine. But just to show as an example here, you're just riding this. Anytime there's an EMA crossover, so let's find a crossover. Where did it first crossover? Let's just talk about it here. So you can see when the green is 8, yellow's 21, blue's 34. When they cross over to the downside, it drops. There's more downside. And then you can usually think of this as like a magnet. Price action always comes back to it as a magnet. So now, when the EMAs cross to the upside, it's riding it. It's a nice steady ride up. Alright, cross down, drops. And from here, this is major bullish conditions, just continuously riding this EMAs. Alright, that's how primarily I use EMAs. What's next? Let's talk about volume. So volume, Jesus, big volume. Let's find. I want to find a capitulation volume. Alright, let's talk about this one. So volume up here. Why do I keep losing the spot? Alright, here we go. Damn, bro. Alright. So this is what you call a buying climax or buying capitulation. You can note the volume right here. Okay. So whenever there's huge buying volume at the top, usually if the selling volume is engulfing the buying volume, that means there's more sellers, and that usually kind of signals like a reversal. So kind of did a bad job explaining that. I'm trying to find a clear example. Damn. So when you see more when you see more selling volume up here, that usually means the trend is, like I said, it's selling volume. So it's gonna continue, or continuation lower. Alright, and this was the top, because there's not, you can see the at the top up here. Oh, that's what I was trying to say. So at the top, there's not a lot of buyers at around 20k. So that means the trend is kind of weakening. Alright, so it's kind of weak because there's a lot of buyers over here, but when we're at the top, it's weak because people are saying, oh, I don't want to buy Bitcoin at 19k. And then you can see a lot of sellers from Bitcoin from here all the way down to, what is that, 10.4. And then trying to find, what's the buying climax? Alright, here we can look at the COVID drop. This is called capitulation. Capitulation is when there's just mass selling pressure, and then when you see green volume engulfing the red volume, that means there's finally a selling climax. There's finally more buyers than sellers. Alright, that usually marks the bottom. Okay, this is the bottom. Oh, don't tell me I lost the spot again. Come on. My bad, guys. It's getting late. Alright, here. There. When you see something like this, so you can see like this like a little PP volume down here, and then boom, all of a sudden you see this COVID drop, and then you see something like this. This is confirmation or strong evidence that there's some good buying volume. So that usually marks the bottom. Alright, and then if you want confirmation, it's a higher low. Higher low is when it's done like this. That's the higher low. Where the hell? So that higher low, that means it didn't break the prior low. So that's leading evidence. And then look what ensued. It bottomed out and it started uptrending. Okay, that's volume. So that was just a basic gist of the 4 indicators I use